Good morning. Good morning. Give everybody like 1 or 2 minutes and then we'll get started. Okay. Yeah. One more notice. All right, let's take a look at the markets. Okay, so we're dumping here. I'm glad that we're cash. Um, so I think a couple things. So because I've shortened up this list that I'm trading, I'm going to be end up trading less, but the sizing much more aggressive when I do trade. Um, just because I've recognized that my P&L is very directly correlated with the S&P 500 and the Nasdaq. So the better, more so the S&P 500. So if I can time this better and trade this more effectively, that's going to be my goal, because this is where most of my money is made. I have until this week, actually, I haven't had a loser this year in any of these names right here. And actually, one that's missing, a couple that are missing, is JPM and XLF. So, and a huge part of that is not because I know something. Huge part of that is the market conditions. And so, a lot of what I'm going to be focusing on going forward is trying to teach you guys, okay, how can I better read the market direction? Okay. So let's talk about this here. So, um, first things first, if you take a look at uh, the S&P, okay, so and so a big piece of this is 75% of stocks follow what the S&P 500 does, okay? They might outperform a little bit, they might not, but like, so getting long up here doesn't make sense. But like when we see these pullbacks, when we see buy signals, um, that's when we want to get long the market. And if you get long up here on a excellent looking setup and it doesn't work out, you just have to know that that's because the market wasn't ready. So, and here was a spot to pick something up. Here was a short, but here's what happens. We have, I don't want to draw all over this because I got my levels marked, but we have a consolidation and then a push up. So usually that's going to be accompanied by like a 4 hour squeeze, okay? Or a daily squeeze. Same thing here. We get a consolidation, we get a move up. Get a consolidation, 4 hour signals, move up. And so, really, the most sound approach is just wait for the higher time frame signals on the index. And now, this is really important. If you follow this, this will make your win rate and your success in trading a lot more effective if you just simply follow this. We're in a squeeze, we get some buy signals, or momentum is headed to the upside in the squeeze, continue to push longs, continue to trade long trades until we start to get a loss of momentum. Now you might say, oh, well, we got a loss of momentum here and we still pushed up. Yeah, you're going to miss some moves. But if you zoom out and look at this here, or zoom in, we had a 4 hour signal, and then this is when we lost momentum, and then look at what's happened so far. So pay attention to the 4 hour, pay attention to the daily, pay attention to the weekly, pay attention to the momentum that's going on in the signals within the S&P 500. I did a class a long time ago that talked a lot about the rotation of the market and like how the squeeze identifies different cycles in the market. So the weekly identifies different in the daily, in the 4 hour, so on and so forth. So right now, what did we see here? Well, one, we saw the momentum shifting to the downside on the 4 hour. We saw it on the daily. And then if we go to the 30 minute, we had talked about this 635 level as the key level. Okay. So you can see here acted as support. It acted as support. Simplify your trading. And when you see a key level, don't try to be cute and be like, oh, the important level is 634.34. Don't try to do that because you're you're probably the only one that's seeing that level. Just look at the psychological levels of that end in zero or end in five. So in this case, 635. Next one, 630. We almost topped out right at 640. Okay. So that's where that key level is right up there. So now what I'm paying attention to is okay, we've held this here. We're losing momentum on the 4 hour. And then once we broke here, this is when I cut all long positions and we took really small losses on them. And only thing I could have done better was get short here. But so now what are we doing here? I'm not gonna get short here. Uh, what I'm gonna look to do is I'm gonna look to wait until because right now you get a gap down like this. You don't want to try and chase it because it's one, fighting the trend. Two, you only want to chase it when we're in a downtrend. Right now we're in an uptrend. So right now, what I'm looking for is how are we going to react today? Are we going to reclaim the 21? If we're not, then if we get another close below and we're down below 625, we get some lower time frame sell signals. I'll look to short it into 620. So key over under level is the 21 EMA, but the trigger level is more so that 625. And I'm using 625 because you can see it was resistance here, 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 here. And I'm not trying to be cute and mark these levels. Oh no, it was actually the key level was actually 626.31. No, it's simplify it. It's the 625. So I'm keeping an eye on the 625. I'm not going to chase the gap down. We're in cash. We're in a great position, and I don't have to jump into anything, and I can just watch and see how the market trades. Okay. So let me know if you have questions on that. Um, so other thing is that we should take a look at is if I drop down to the lower time frames, easiest things to identify, momentum shifting on the lower time frames. Okay. Then if we want to get into the weeds, right? So looking at the lower time frames, you can see how this 635 was a key level and we broke it FOMC and then we got this pop up. Now when you see this, see how we faded the gap? Now look at this. We gap up, we fill that gap and we fill it, we blow past it. Then it continued to give us more downside. We got another gap up, we filled that gap, and then we continued to the downside. Okay. Let me see if I can. Here's another example. We filled the gap and then that was a short opportunity. Let's see. Where's another one where we gapped up, we filled the gap, and it was a short opportunity. But usually you want to see it almost immediate like this. Gap, fill the gap, and short opportunity. And usually what it's going to do is wipe out those highs. And that's so I'd have to look at my stats. But the when we gap above the previous day's high, there's like a 50% chance or sorry, not a 50% chance, like an 80% chance. I can't remember the exact number, but we will fade back into the previous day's range. So that's what happened yesterday. But 635, you can see here, there's this trappy action. And then look at when we got this break here, notice the volume came in after FOMC, but then look at this. Volume came in, we had this dead cat bounce. Volume came in on this right here, breaking that 635, and then it increased, and then it increased. We had a retest, and then we flushed. And the reason to pay attention to these these levels that are round, nice numbers like this is because that's where um how do I put it? That's where the strike prices are in options. A lot of you trade options, and these strike prices are important, especially for market makers that are hedging their bets. So for every option buyer, there's a seller, and they have to hedge their bets. So the next thing is I don't see anything to do here. We're continuing to flush, and I'm going to use this opportunity to preserve some mental capital, wait to see how we pan out. But that 625 looked like a pretty decent short here. That's okay though. We don't need to trade more, just trade high probability when they set up. Okay, so what is the most high probability thing? If we're down below, like if you want a simple sequence of events, we're down below the 21 EMA, we hold below that for a couple days and trade sideways. We've You have to look at this the same way. Range contraction, meaning chop, range expansion, range contraction, range expansion. We are in a range expansion phase. You missed it. I missed it. It's okay. We're in cash. That's a great place to be. So what do we do now? Wait for it to trade sideways for a day or two. And then so what does that usually produce? A 30-minute squeeze. Okay. Oh, one more thing to tell you guys about this. So look at this. You look at these 30-minute signals, you see how a lot of them pay off, but then look at this. So notice when they stop working. When this one stopped working, that's when you stop trading them. That's usually a reversal signal. I've taught this for probably since this thing has been created. So signals that don't work, especially in the overall market on the 30-minute time frame, is not a bad thing. It's a cautionary tale to tell you, hey, you should not be long anymore. So when they stop working, that's when you know that you should not continue to be long. It works really, really well. Look, see here, they work, they work, they work. Oh, it stopped working here. Okay, now I must stay cash. And then you get a couple sell signals, you get to trade those. Oh, this one didn't really work out. So now we can go back long, and then so on and so forth. Um, oh, 30-minute signal worked here, here, and then it didn't work here. Look what happened. Okay. It's a excellent topping signal. I'm trying to figure out a systematic way to actually trade it, but um, yeah, see here, 30-minute signals didn't work. Okay. Shorting opportunity. 30-minute signal didn't work. Shorting opportunity. 30-minute signal, kind of worked, but shorting opportunity. 30-minute signal didn't work. Lower high, shorting opportunity. 30-minute signals didn't work. Shorting opportunity. Yep. So hopefully that helps you out there, all those kind of pieces of the puzzle. Yeah, and if you're jumping around trading all these different strategies and not just focusing on one, you're not going to be able to master it. You're not going to be able to master what's going on. I always treat them as a look for better positioning, if that makes sense. So, no, I would treat them as if it stops working, you trade them until they stop working. And then when they stop working, that's usually signaling a top. This is one of the most reliable patterns that I found for topping markets like in the S&P. Okay. When a 30-minute signal fails, it's usually a pretty spot on place to go short. Okay. It just stopped working. Look, you could have gone short. Stopped working, you could have gone short. Stopped working, 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 short. And then same thing for longs. You switch it. Yeah. So yeah, that's exactly it. That's the point. So when you're saying I noticed this about the 30-minute signals, it's it has been working the whole month, but then stopped working this week. Yeah. So the newer trader would think, oh, I just keep trading them, the 30-minute signals. No, they're telling you a story. What you're seeing when you see the 30-minute signals working over and over and over again, that's because we're in a trending market. And then when it stops trending and it stops working, then it's a signal shift. It's a trend shift. Okay. And so that's the piece you got to use. Like, when they stop working, that's your way to identify, okay, something's changing here. And then that was one of the key tip-offs here for me to go cash. And it works on any time frame. So let me see if I can find a good example. Right there, they didn't work, and then look at the flush. Right there, didn't work, and then there's the beginning of a bear market. Right there, they kind of worked, but not really. Then there's the beginning of a new uptrend. They didn't work. Oh, well, here's an opportunity to go long. They didn't work. This was really choppy price action. This was a stage one bottoming. They didn't work here. Well, they worked. They went in a new high, so you kind of would have just sat on that one. Um, didn't work here. And then look at. So, yeah. If they don't have strong follow through like this, usually that means that it's not a way to use it. So I'm working on a way to figure out how to get short in a systematic way. So like here, that would have been a great way to get short. So you can see it failed. Close. What do I constitute as a fail? A close below the 21. And then you use that and you can use like a 1 ATR stop and then you just use that. So like for example here, the ATR is a little jacked up right now, but if we go back in time, the ATR was 1.75 and you use that and you would have been 2.3 by the close and then 8 to 1 on that. But with options contracts, you'd be up a few 100% at this point. But right now I'm not going to chase it. So yeah, this is not a good look, but the stronger the run up, the greater the fall. That's usually what happens. And we're still pretty far away. So I think we're going to go test this all-time high again. It's more than likely. So that's the S&P. NASDAQ, same thing. XLK breaking the 21. Apple actually went back red, so that's a really bearish sign. Let's run through the rest of these. How's Soxel doing? Soxel, yeah, that one's down another 10% today. IBIT. Yeah, see, it's all following the market. So you just got to make sure that you're trading things that are following the market. And so VIX is at 20, above 20. So, okay, so that's a good question. Um, what do we look for now since the market is pulling back? We don't want to just buy a dip. Positions on the dip. We need some kind of confirmation that the market is resuming its uptrend. What kind of confirmations do you look for to determine that? Okay, you try to tell me. You try to tell me some of the things that you think we would look for. Based on all the stuff we just talked about, give me a few things that we might look for. Because it's the same thing, it's just in reverse. XLF falling off a cliff. You would look for consolidation at the 21. Okay, so what does that mean that you would do now? It's not a trick question. What should you do now? If we should wait for a consolidation up to 21, what should we do? Yeah, you could wait for a relative uh or a volume break. But right now, yeah, so the key thing that I was trying to point out there is you just got to wait. There's nothing to do here. If you're trading this, you're just in FOMO. Because there's no setup. So there's a few things we can do here. If we're trading below, if we reclaim the 21 on volume, that's when we become interested. Then you want to look for some other signs. Um, Easiest ways to do it, 4-hour signal or a daily signal or a weekly signal. But for now, for now, I'm kind of leaning bearish, just in the short term because we are so extended from the 9. We're extended from the 21. So I wouldn't be surprised to see a pullback. And I think the easiest way to play that will be through 30-minute signals. So, and then what do we look for? Okay, starting to see a reversal. So we see some sell signals that don't work on the 30-minute or relative time frame. And then when those don't work, that's the first sign. We build a higher low on the lower time frames. Okay, then that's when I would want to start looking for the stocks that are holding up the best. But it's volume, it's price structure, so building a higher low, it's understanding the signals. Just whether it's a buy, you wait for the next buy signal, or on the higher time frames, or you wait for a failure of a lower time frame signal. Those are kind of the main ways to do it. And what's nice is you don't have to bounce around from system to system. You can use the signals to determine all of that, whether it's a working signal, a failed signal, whatever it is. I would recommend staying away from all time frames lower than the 30-minute. That's what I would recommend in any market condition on every single day of the year. And I'll tell you, every person that I've coached, the ones that have became profitable have always stopped day trading and they've made way more money. And then the ones that kept day trading blew their accounts because they didn't listen. That's what happens every time. I've had um I'm not gonna do that because I'm not gonna point number, but okay, that's what you need to understand. You're gonna piss your money away day trading, and you can either learn from me telling you that, or you can learn from your own experience and own heartache and sadness and frustration with markets. So no, I wouldn't even touch anything below the 30-minute time frame, and that's because I genuinely want you to make money. And I know you personally, Brady, so please do not day trade. I don't care if you've made money doing it, don't do it. You will lose money. 97% of people after 1 year lose money day trading. 97%. I think it's actually it's after 180 days, it's 97%. And I think after 360 days and anything after that, it's like 99%. But if you focus on the higher time frames and you swing trade, like the 4 hour or higher and hold trades for multiple days or weeks, the success rate is or the failure rate is only about 73%. So you just 10x your odds by getting rid of the smaller time frames. Okay, so 786. So let's go back to kind of evaluating what's going on. I think we're just seeing a pullback on the weekly. XLF looks terrible. SMH holding up okay. Let's check and see. So XLK is holding up the best. So, and I think that's because of Apple. I think if Apple loses its bid, that's going to be a lot worse. I was looking at Microsoft because it was showing some relative strength this morning. It was gapping up, but ended up failing that. I do want to keep an eye on this, see if it ends up printing a 30-minute signal or something like that, because this is showing a little bit of relative strength, but I'm trying to escape the rat race. You will forever be in the rat race, day trading. That's why these funded accounts only offer day trading. You're not allowed to swing trade because it has the highest fail rate. And they only offer futures because futures has specifically day trading in futures has the highest fail rate out of any style of trading, even higher than options. So there's a reason behind all of it, and they make all their money not from their traders, but from failed accounts and reset accounts. Um, and it's easy to get stuck in that loop, that thinking that you're making money because you have a few good days. But then overall, you'll realize if you pull all your stats and you're really raw about it, you'll see more than likely you're not making money doing it. It's always though it's the swing trades that hit big that are the ones that give you those big returns. Some people may say otherwise, but everyone that I've learned from, um, my own personal experience, that's what I've always gotten from it. I don't make money day trading. I only make my money swing trading. Okay, so let's see here. Enough of the rant. Honestly, I'm not going to do anything today, guys. I'm going to wait and see how this shakes out. Google looks pretty good here. All it's doing is pulling back to its 21 EMA. Um, Amazon's kind of getting wrecked. Bitcoin, I'm glad we closed that position yesterday for a 12% loss. Tesla, yeah. I was hesitant to get short this one, but this one looks like it's ready to go. So, yeah, Apple looks really weak, but so look at this. If we compare it on a relative basis to everything else, it's actually the strongest one on the board. So this would be like the last one that I'd want to short because it's actually is down a lot less than the overall market. Amazon is the weakest. What also is in XLY? Tesla. Tesla looks like it's looks really bad here. Yeah, that looks really bad. The volume, this could be a pretty high volume sell-off. It broke 300. Wow. This kind of seems like a really great shorting opportunity in my opinion. Let's just see how it closes. But yeah, you can see it's breaking this trend line. It's breaking the higher lows. It's showing up on high volume. This thing looks like a short for sure. $14 ATR. For a swing, Tesla looks really good to short. It's breaking 300. That's a key psych level. Yeah, that looks really rough. AVGO back to the 21 EMA. That's relative strength, if you ask me. What's the put call opening up at? Oh, the put call's at 0.92. That's the highest it's been in a really long time. NVIDIA hasn't even made it down to its 21 EMA. JPM breaking down really bad. AVGO. So let's take note of these ones that are holding up really well. Well, not really well, but you know what I'm saying. So Google, is it relatively safe to consider shorting the market with a stop when you notice a low volume and no follow through on multiple buy signals? Um, so yeah, that's kind of what we discussed, but uh if you're if you haven't completely mastered trading just the signals in general, just use it as a sign to not be long or yeah, just like go cash. So yeah, so those are the ones we're going to keep an eye on. Okay. So yeah. All right, that's all I've got for you guys right now. Keeping an eye on Tesla at this $300 level. This could be a really good break here. So, but any other questions for me? Right now, we're kind of going to just sit cash and just wait and see what we've got. All right. All right. Thank you guys. Thank you guys for coming, and I'll see you in the chat.